Hi everyone. My name is Peter Chen. I'm a senior policy analyst. Policy Perspective. So background for those who don't know, New Jersey Policy Perspective is a think tank focused on economic, racial, and social equity. We're specialists in the New Jersey state budget. We have lots of thoughts about that, and we cover a wide range of topics: healthcare, education, the criminal legal system, environment, climate, transit, and tax and budget work, which is where I focus. Some key accomplishments: the minimum wage increase, which, as you know, hit $15 $15 an hour this year. The millionaire's tax, which places a special tax rate on people earning over $1 million in income, and also allowing driver's licenses for all residents, not just those who are citizens, citizens and legal residents. So, obviously we cover a wide range of topics, but our focus is on the budget. So the goal for today is really to just sort of understand how the child tax credit works here in New Jersey, to understand what resources exist to help you file your federal and state tax returns. I was glad to see Citizen Action is here. Citizen Action can help you file returns for free, and getting some feedback on tax credits and sort of outreach to families. So the basics. What is the New Jersey Child Tax Credit? So to understand the New Jersey Child Tax Credit, you have to understand the federal. The federal government has had a child tax credit for a while, but importantly, it was expanded during the pandemic. You may remember getting checks during the pandemic based on the number of kids in your home, and that was due to the expanded child tax credit and also advance payments. We're now back to the base level, which was $2,000 per child, rather than the $3,000 and $3,600 credit. And a lot of families miss out on the full benefit because the credit has what's called a phase in. That means that if you don't earn enough money, you actually get less than the full dollar amount. So about 400,000 New Jersey families miss out on the full credit. Hopefully some of that will be fixed with new legislation that's moving through Congress, but I'm not counting on anything moving through Congress anytime soon because it's Congress. So, but the federal child tax credit is important to understand because the refundable the expanded child tax credit from the pandemic became the basis of New Jersey's child tax credit. So in New Jersey, we have a state child tax credit as well. So you pay federal and state taxes if you file income tax. And that means that if you file income tax in New Jersey, you're eligible for a $1,000 maximum tax credit per year, per child for tax year 2023. Now, importantly, this is for children under age 6. This is more of a young child tax credit than the federal, which covers all kids up through age 17. And your income has to be below $80,000. $80,000 was selected because it's roughly the state median. And it's included in your annual tax refund after tax filing. So that means there's none of those sort of monthly checks. This just adds more dollars into your tax refund at the end of the tax filing season. It was created in 2022, based in part on my report. So we're glad to see that, and it expanded further to the $1,000 that is currently at for tax year 2023. So how much is the credit? So if your income is less than $30,000, it's $1,000. And then for every additional $10,000 you earn, the credit per child is reduced. This is called a phase out. And the idea is that the more you earn, the less you need the credit is needed. We would like to see these dollar amounts expand and the phase out reduce as well. But this is how the law was created initially. There are obviously lots of ways we'd like to improve it. But as it stands, if you file your taxes for tax year 2023, these are the amounts that you're eligible for. Now, the next slide is lots of words about eligibility, but I'll walk through all of it. But the basic piece of it here is that if you're a New Jersey resident, you filed New Jersey taxes, and you have a child younger than age 5, and you have a taxable income earned under $80,000, you're eligible for this. There are a few little quirks that I'm going to walk us through. So the first one is you're a New Jersey resident for either all or part of tax year 2023. If you're a New Jersey resident for long enough to need to file taxes, you're eligible for the credit, but then the credit is prorated based on how many months you were a New Jersey resident. The second bullet point is important here because the federal child tax credit requires a Social Security number. And the earned income tax credit also requires a Social Security number. But the child tax credit is the state level child tax credit is permissible for anyone who files, regardless of whether they have a social or not. So if you have an individual tax ID number, that's a number you can file with the IRS for in order to file taxes, which many immigrant residents do in order to improve their chances of, naturalization. Then you're eligible for this. The key is that the kids, have to have a social or an ITIN themselves. Most kids are not going to have a tax ID number because they don't need to file taxes, but there are unusual circumstances in which they're sometimes granted one. The point here is most kids, even who live in mixed status households, are citizens and therefore have a social and can be claimed. The third bullet point is pretty straightforward. You have to be able to claim the child as a deduction. That's a concern for like split custody households or situations where, the child may be already claimed as a deduction on someone else's taxes and, in a 50-50 custody split. So again, you can't double claim a child on two returns. They get to be claimed once and their credit is claimed once. Child must be age 5 or younger. We're trying to change that to move that up to age 11 or younger, but we're running into some concerns about cost. You must have a taxable income of $80,000 less. We talked about that. And you can't have the filing status of married filing separately. You have to file as one of these, the categories. Married filing separately is a particular tax filing status that folks may choose to do. But in order to claim the CTC, you have to be married filing jointly. This is because of technical tax reasons, which I'm not going to get into, but that's just a flag. Oh, wait. Any questions about this slide? Because this has lots of information in it and it can be confusing.
I have a question.
Yes.
So for, I think it's for the fifth bullet point, does someone have to work? What if someone does not work at all? Can they claim?
Yes. This is something that's particular to New Jersey's child tax credit, which is that it does not require that you have earned income in a given year. So you can file a zero return. So what's an example of this? Let's say you are retired and you just have Social Security earnings, which I believe are not taxable for state purposes, but whatever. Let's say you don't have income, but you are supporting a child and that who lives in your home and is a deduction for would be a deduction for tax purposes and otherwise meets all the requirements, you can claim the credit. This is something we made sure to work into the law. Lots of the tax credits, like the earned income tax credit, it's right there in the name, it requires earned income, right? You have to have earned a certain amount of income in order to qualify. And the federal tax credit works the same way. You're not eligible for the federal credit unless you have a certain amount of, or the full amount of the credit, unless you have a certain amount of income. So you can technically file a zero return and still qualify for the CTC.
Thank you.
The state CTC, importantly, not the federal.
Got it. Thanks.
Other questions on this slide?
Yes, I would like to ask, it says that one of the requirements is that the child must be age 5 or younger. So older than 5, you cannot ask for a child credit.
That's right.
Okay, thank you.
Now, again, this differs between the federal and the state, right? The federal allows for people to claim a child up to age 17. And the New Jersey one is up to, 5.99, right? This is, again, tax law is confusing, especially because of the differences between state and federal. That's just going to be something that'll, how do I put it? So New Jersey's earned income tax credit, which is another important tax credit for, for working families, is based entirely on the federal. Basically, it's the federal credit, and it's a certain percentage. At this point, it's 40% of the federal credit. So if you qualified for the federal credit, it's simple. You automatically qualify for 40% of that from New Jersey State EITC. But we wanted to design our child tax credit differently because of the restrictions of the federal. So for example, the federal child tax credit, if you earn less than $2,500, you don't qualify at all, because they don't want that. When it was written, the fear was people are just going to, they're not going to work and they're going to get a child tax credit and it's going to be worth more to them than even working for whatever. So like that was the fear. Obviously, we know that that's misguided, but that's one reason why we didn't want to just say you get a percentage of the federal child tax credit. But that means that there are going to be differences between the programs that make it somewhat confusing when you're applying for them.
Thanks.
I see another hand. Go ahead, Shalini.
So my question is on the bullet point 3. You mentioned something about parent who have the custody of child in case of a separation, and so I just need more information on which parent can file for in case it's a joint custody, and let's say child is living 2 weeks with one parent and 2 weeks with another parent. Who gets to file as tax credit, and is there like whosoever files first, or is there a requirement, or is there eligibility for it?
So there is a technical answer and then less technical. The technical answer from the IRS is whichever parent is the parent who has the majority of overnight stays. So whatever, there's 365 days in a year. If you have 183 of them, you are the parent who can claim the tax benefits. In practice, this is a big problem for lots of joint custody parents, where parent 1 will claim the deduction, not telling parent 2 that they claimed the deduction. Parent 2 also claims the deduction. The IRS flags it, and now one or both of them has to relinquish it, right? Like that kind of thing does happen. And again, this is not tax advice or legal advice. This is just a description of what occurs in these joint custody cases. So if you are filing and you are confused about whether or not you can claim a child as a deduction, you got to talk to a tax preparer, and you have to find out from the other parent or other person who can claim the credit, whether they have claimed it. Again, the technical answer is whoever has them a majority of the time. Like the IRS does not believe that there is such a thing as 50-50. Someone is keeping them more of the time than the other, and that's who they care about. However, it's not always that simple in practice, because people don't necessarily track every single day, every single night that one child is with one house or the other, right? So, but it's the majority is the general. But again, if you have questions, you have to talk to an actual tax preparer and not me.
Got that. Thank you.
But it is a confusing point, and we know that there are lots of kids, who are in joint custody situations. But I would say that, the pure 50-50 split is actually quite rare. Okay, any more questions on this slide before I move on? Because I know that this is sort of the technical guts of who's eligible for this and who's not. Okay, so I'm going to move on to our next slide, which is how to claim. The nice thing about the child tax credit, and the reason why we are enthusiastic about the child tax credit as an anti-poverty tool, is because it and a tool to just help families afford the high cost of having children, is there's not a separate application for it, right? You don't have to do some additional amount of income verification and go through this extensive application process. There's just the tax return. So if you already file your tax return and you just do it like normal, you get the money. That's it. That's the application, is like file your taxes in New Jersey. Now that's easier said than done, but the reason why we focused on that is because it's something that there's already a process to do. And again, the income verification is baked in. If your taxable income is below a certain amount, you don't have to go through some additional like proof of your income. You already said it right there in the tax. So that's how to claim. Straightforward. So the problem is there are lots of obstacles to filing your tax returns, especially if you haven't filed previously or recently. For one, as discussed in the previous slide, taxes are confusing, right? How do you claim this? Are you allowed to claim this? There's definitely concerns. As a second point, many people are below the income threshold. So if you're below 10,000 or 20,000 for a single person or married couple, you don't have to file taxes. And I think when most people think of filing their taxes, they think they owe the government something. But when you're relatively low income, you actually are more likely to get something back from the state. For the lowest, I think the lowest 20% and even the lowest 40% of income filers, we actually have functionally a negative income tax where you get back more in credits than you pay. There's also, of course, mistrust and fear of government. I think there's lots of reasons to mistrust and fear the government, particularly when it comes to taxes, right? Like, if you do something wrong on your taxes and suddenly you're on the government radar, that may not be something you want to have known, right? And you may, there's a fear that you open yourself up to other liability. So let's say you have prior tax obligations that are unpaid, or let's say you have informal cash income that you earn that you have not previously claimed to the IRS. There are lots of concerns that folks have that make them unlikely or unwilling to file. I will say some of those concerns, like because of the generosity of tax credit systems, even if you have informal cash income and you haven't paid taxes on it, odds are your tax liability is still you're still owed more by the government than you owe. But that said, it's part of what makes it an obstacle to filing. One thing I'll also note on the first point of taxes are confusing is that the financial lives of working people in New Jersey is often complicated, particularly for low and sort of low middle income families, right? So you may have cash streams coming in from different sides. You're doing some babysitting and earning some income there, and you're also you have remittances and maybe right, like there's all sorts of different ways. It's a complex financial life often, and one that's actually more difficult to capture on paper than like my boring taxes, which are just like I have one W-2 and that's it, right? So I think the confusing nature of taxes is even more confusing if you have like also you drive an Uber on the side and also you have a 1099 for some miscellaneous income you generate, right? Like that's much more challenging. However, there are resources. The first one is, volunteer tax prep. I know that Citizen Action provides free tax prep. And if you earn less than $79,000, you are eligible. There are also a variety of free and low-cost filing tools for folks who have not filed before. But again, I understand why these are intimidating. It's part of why the volunteer tax prep is so helpful, because they are professionals who are able to assist families and tend to file more accurately than if you were to file on your own. I'll leave the links and I'll send the presentation, Hannah, so you can send around, so you don't have to write down these URLs. And there's a question about like why bother filing? I mean, the big one is the dollars you can get in tax credits, right? The earned income tax credit, the child tax credit, the anchor program, right, for property taxes. You still have to apply separately for that, but the point is like there are benefits to filing your taxes. The benefit to the anchor program was that if they had your information on file, they would just send it straight to your bank account rather than, like a lot of it was conducted automatically. And of course, having a completed tax return is helpful for income verification in other areas, right? So you don't have to have like 18 pieces of paper to tell how much money you make. Tax return is pretty good standard. But that's, that's something that I think we are working towards. There's other policy that we're working on to try to make it easier to file, trying to make it more automated. One thing that's annoying about having to file taxes at all is the state and federal governments have like 90% of this information on file anyways, especially if you, only have W-2, like standard work hour employer labor. Then those paychecks, they have your W-2, they have all the information. They know whether you have health insurance. Like they have all of this information on file. They could do 90% of your taxes for you. And you could just check a box and say like, yes, I agree that this is true. So, I mean, that's the other thing that we're working towards. The federal IRS is trying to create a free filing tool that would sort of pre-fill some of this information, but it's still a ways off. In the meantime, you still have to file. So if you wanted to claim the credit this year, or rather, you want to file for the 2023 tax year, you're going to have to file it yourself. Okay, that's it for me.